want to talk about what you're seeing on the platform and really what you hope to do, what you make of the fact that the investor class that had invested in this company is not giving this company the same kind of valuation it had just months ago.
Good morning, Andrew. Yeah, it's been interesting getting to know the clients here at Robinhood. They're navigating this recent bout of volatility. They've pulled back a little bit in terms of buying. If I look over the last couple months, their buying has not been as aggressive. There's always going to be a positive skew. In other words, on the retail side, you're always going to see a few more buys than sells. But, you know, some of the names that they're still buying are Tesla, Microsoft, Amazon, Apple, Rivian. And on the sell side, Lucid, Baba, Boeing, PayPal, Carnival Cruise Lines. But overall, I would say, you know, remember, these are, at their core, younger investors that may not have as much experience with the volatility that we're seeing today.
And so how are you thinking about that volatility in terms of that core base of users? And is the plan to try to transfer people over who may actually have more experience into Robinhood, or is it to educate those that are on the platform? What's the strategy?
A little bit of all the above, Andrew. So really, I think there are three parts to the strategy. One, I would say all of us would agree that Robinhood really cracked the code on getting new investors into the marketplace. They made it very frictionless, intuitive, welcoming. And so to continue that, but also at the same time, and to your point on education, you know, we have 40 million people subscribed to Robinhood Snacks, where we do some education, but then deeper education for clients that are already here and letting them sort of mature and grow with us. So some of the things we're working on and probably delivering over the course of this year would be retirement accounts. We've already launched some first trade recommendations, a lot more education, a fully paid lending program so they can share in some revenues, longer hours, extended hours, hyper extended we call them, because the concept of, you know, having to wait for a bell is a little foreign to this younger generation. And then finally, for clients that want to come here with more experience, to your point, we've just opened up the ability to ACAT their accounts in, and we're seeing accounts that are multiples of the size of our current account. So for those clients, you know, we're building out more advanced tools, education, and strategies so that they can enlist those.
When you look at the growth of Robinhood, one of the things that really powered it was crypto and meme stocks. Let's break those apart for a second. What are you seeing in terms of the meme stock phenomenon right now, and whether you think that is a feature of the markets in the future or that was a fad?
You know, it was such a surprise to see what happened. The only thing I would say is I'll just look at customer behaviors and tell you that those aren't even on the top handful of names that are being traded anymore. So, you know, to your point, is probably a fad. To say that it won't happen again, I don't know that I can predict that. On the cryptocurrency side, as you know, I think we have 7 coins listed. We're doing a lot of exploration about finding compliant ways to expand that, and also, you know, roll out some other features people have been looking for, like wallets, and we also have aspirations to take this brand global, and we would do so crypto first.
Crypto first. Explain that, because right now, obviously, Coinbase and others are already in that space.
Well, I think the path for us to go global and have the most traction is probably through crypto, and then maybe follow with other components of the offering, because from a just from a regulatory standpoint and all the other facets that come into it, it's probably the easiest way to go global.